Ladies and gentlemen, Greg Michalowski from ForexLive.com. I want to take a quick look at the dollar versus Canada, so sit right there. Let's get going. The price action in this pair has been volatile to the downside and then to the upside. Sometimes intraday, the market moves sharply to the downside yesterday and then sharply moved it back to the upside, retracing all those gains and closing higher, trading yesterday and trading here today. We saw a continuation of the volatility. First, the market moved down to test the 200-day moving average. That's the green line in this chart, and found support buyers against that level in the Asian session. Moved higher, breaking above the 100-day moving average here, moving our way up to the 61.8% retracement of the move down from this high right here. I guess this is the end of April high to the low that we saw in May. 61 comes in 135.32, and the price moved just above that level before rotating back to the downside. That move back to the downside fell below the 100-day moving average here, and then below the 100-hour moving average. And although the price rebounded back above that moving average briefly here, it continued its move to the downside and then fell more recently over the last few hours below the 200-day moving average for the second time today, and it went and made a new low. We are seeing oil prices higher. They're up, currently trading at up $1.86 to 2.62%. So that may be helping to the strength in the Canadian dollar, but the technicals are certainly showing some weakness below the 100-day, below the 100-hour moving average, below the 200-day moving average, and now testing the 200-hour moving average at 134.36. So what next? Well, if the price can remain below the 200-day moving average, that's this line right here, 134.63, the sellers will be in control, and it'll be a matter of time before the price breaks below the 200-hour moving average, increasing the bearish bias and having traders looking toward this swing area down through here, defined by these different swing lows and swing highs, including yesterday's low that came down to the bottom of that range and found support buyers. So break below the 200-hour moving average, goes toward this swing area, and then we start to look toward the extremes for the month of May down through here. Conversely, if the price were able to move back above the 200-day moving average, that would increase the bullish bias and have prices moving toward the blue lines or the 100-hour moving average, followed by the 100-day moving average, which can be more definitive about which way the market is going or potentially going. But the ups and downs in this currency pair suggest that the market doesn't know. So why should I know? We just have to follow along with the technicals and hope that the breaks, which are defined by the market, lead to further momentum in the direction of the break, whether that be to the downside or the upside. But right now, we are trading between the 100-day moving average on the extreme above and the 200-hour moving average on the extreme below. We'll see what happens next. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.